according to 265. Continued, there are some higher numbers. Continued jobless claims, 143 million versus one. That's basically the same thing. 143, 1,430,000, 37,000. So good morning, good afternoon, and good evening. Let's see, what can you say about this and that? And the other thing, well, the stock markets are basically just sitting dead. Interest rates are kind of flat. What else can we say about any of this stuff anymore? They're saying simple things like, let's see, August Fed index, it's 6.2. They were thinking it was going to be minus 5.0. Let's see. The narrative in the jobs market is that at this point, they're looking at people who work a second job more than just working jobs. I gotta laugh. It's like as if they disconnect reality and finance altogether all the time now. 90% of the Americans who have a job have a side hustle, they say. It's amazing. They're saying basically is that things are not good, and with a media that keeps on cheering on these crazy policies, we just have to deal with it. Anyhow, that's where we are. This is Doc. I hope I said good morning, good afternoon, and somewhere good evening. For some of you, it's heading for Friday already. You're into the Friday. I'm looking forward to the Friday. Let's take a look at it. Where's J4X? It's here somewhere. There it is. There's the dollar index. Dollar index looking, I don't know, it's kind of side. No, I see. They put some pressure into it by the end of the day yesterday and pushed it into a sell. How about that? And what are they doing? Yeah, that's what they did. It was up, but it actually moved by the end of the day. The index moved it down. So I wonder what we're looking at when it comes to the pairs trades. We'll take a look at that in a minute or two once I finally figure out exactly what I want to say about this, that, and the other thing. So we have the Fed minutes came out yesterday. We discussed about that yesterday. We were looking forward to them since Monday. And pretty much the Fed minutes came out pretty clear saying, yeah, we're going to raise rates again in September. So obviously they made it, the minutes actually sounded like they want to put the country into, they want to slow the economic policies right now. Or, maybe they're hoping that, maybe they're trying to do two things at once. Maybe they're trying to reduce the craziness in Washington, now that they know that things are going to change in the next 3 months. And we're seeing the same thing at some of the major, or let's put it this way, the mainstream media are starting to say odd things like that bill that was just passed is bad. I mean, MSNBC and a few of the others are saying things like that out of nowhere. It's like, well, why'd you wait until after it was passed to say this stuff? Why do you realize that now? And I was talking to Robin about that, and I think we're getting to, that's that feeling I've been seeing for months now, where a lot of people are anticipating the election. And I don't care how they turn it or twist it or describe it. In the end result, we're seeing a lot of evidence that it's going to be one of the most unique events we've seen in the country here since 1871. So we've got our eyes on that. Oh, there we go. There's Robin. Hello, Robin. There is Alagog. Hi, how are you? Vad? Alami? Alagod. How you doing? I'll call you Alagod. And there's Metho 2000. So, yeah, we're seeing some, it's early too. It's wrong. I said this to Robin. Or I might even send it in the webinar yesterday or the day before. Normally we see this happen about a week and a half before the election. We're seeing it. We're starting to see odd statements coming from mainstream media that that normally would come about a week and a half before the election or a week before the election, and here we are going into the middle of August. All of a sudden, they're making these statements. It's like, what? Wait a minute. Is it late October already? I'm seeing it. People around me keep on telling me they don't see it. I see it in the math all day long. I see it in the election math I see all day long. Republicans haven't lost a race for a year and a half. I mean, they keep on winning seats they haven't won in 125 years. There are many elections that go on for, a congressman dies or retires or something like that out of nowhere. They have to have an election, and they have these elections, and Republicans keep on winning these seats. 2 in California, a couple in Texas. Where was it? Somewhere else. I'm trying to think of one in Indiana. So forth and so on. They've been going on to the point where it's it just gets it becomes obvious we're not seeing losses and on the Republican side, and the voting is very strong. In primaries too, we're seeing it. So I'm a little confused why the media all of a sudden is trying to tell us actual facts. It's really weird to see that. Here we are every day, we back up our facts with actual live data. So what is your idea about recession in Europe? Well, I'd imagine you're already there. I mean, we talked about that about a year and a half ago. The European Union itself seems to be down, but then you have your young eastern states, the new eastern states like Poland and Hungary and Czech Republic and Romania a little bit less, but we're seeing Bulgaria and so forth, moving towards more of a capitalist system away from the European socialism, and so their economies are stronger. You see Poland in the position of the second largest industrial nation now on the continent. I guess you could say the old European Union is more sluggish because of the socialist policies. The new members of the European Union are much more dynamic and productive because of living under socialism. They've kind of drifted away from socialist policies. I hope that makes some sense to you, or does that ring a bell, kind of, in the sense of does that make sense to you at all? Am I getting close to understand? I think I've been understanding European markets for a while now, doing the webinar for almost 10 years, and through Dukascopy, and I've seen this go on and on and on. I see young people communicating in the webinars throughout the years, really hungry for free markets and free people, and so I can see that the the new European Union members are much more connected to that. And we can see out of Germany and so forth where they're basically in a recessionary period. And I'd imagine France is the same way because they keep on, just doing policies that are against free markets. And that's pretty much what it comes down to. You can call it socialism, you can call it whatever you want. But if you don't have free people and free markets, and you keep on taxing and limiting growth, that's what you get. You get limited growth. So will Europe bounce? I would assume it will, because I expect to see America start to bounce in the next 6 months. So if America is going to start bouncing, then the European Union will start to, have more of a positive situation economically. I hope that makes some sense. I hope that I was, informative on that side of it. Let's see, what else can we say? I guess that's about it. I guess let's take a look at the currencies. Also, if you notice, the Forex pairs trades, we show it here each day. For the last couple years, they are pretty much trapped in a channel. It wasn't until the inflation kicked up that knocked them out of their channels, and now you can see they're kind of trying to drift back to those channels again. Let me show you an example of it. Well, let's go to the euro. The euro is a poor example. at this moment in time. But at the same time, I can show you the channel that we were watching for years in here. Let's see, where's it at? Let's shrink this down. So it was inside this channel for a couple years, and it would bounce, and further back you go, you see it bounces up and down against it. We don't have the lines in it at that point, but you can see it's there. It's bouncing off the bottom of it, runs to the top again, and we Fibonacci those channels, and then the inflation kicked up in this area here. People started to accept the inflation finally after we were talking about it all the way back in July. And once that psychological factor occurred, where they started to accept the inflation, you can see it broke the foundation or the low of the channel in the euro. And it did this in all the pairs trades. And what's really curious, we talk about this here, what's really curious about that is that the two currency pairs that have basically stayed inside their channel is the Mexican peso and the Canadian dollar. And you have to wonder, that location situation. In other words, both of them, one's the south of the United States, the other one's, bordering it, and the other one's the north of the United States and bordering it. And so, obviously, they're influenced more by, I guess, America physically in trade and commerce than, say, Europe or England or so forth, and Australia and so forth. In other words, other countries, because of the distance and time. I guess that's a good way of describing it all. But I guess I gave you the answer that I believe, and that is that I think we'll see a bounce in the next 3 to 6 months after the election, a couple months after the election, or right. I guess I would say a lot of times you buy on rumor, sell on news, and so the rumor might be once we know what the size of the election victory is, then we can go from there. Okay, so there you can see the euro. Let's see, the euro is trying to get through the buy number today. You see that right there. Let's put it up on J4X. There you go. You can see that there. It's trading up into the daily buy at the moment as we speak. We're in that weekly buy. We kind of thought that there would see some strength out of that because of that weekly buy. I hope that answered your question there. Alaga maybe? How's that? Am I enunciating it correctly? Alaga? Something like that. All right. So you can see here the euro's picking up. I'd imagine the cable's doing the same thing. Let's see. You can see over in J4X we still have some red going on there, and you can see we do have a green dot. 2 days in the euro, one with the volatility signal of a red and a green, and today just a green. And you can see the line has pierced through, and you can see the stochastic here is piercing through it as we speak. Just waiting for some green to develop up in here. Let's see. But we're already there on Chicago Quant Technologies. Now let's jump over to cable. Cable is just a thin way away. You can see that's still in the minus. But again, in a weekly buy for going on a second week and holding up. I'd like to see this get through the zero line, of course. And let's see it here. There it is right there. Doing the same thing here. It's bouncing up a little bit, the fast stochastic versus the slow stochastic. And we are missing the that action still right there. We need a green to develop out of that. And so Chicago is doing the same thing. It's on the edge. Notice there's no green dots in here either right there. It's still kind of weak. All right, from there, let's see. Huh. Interesting. I have to check that out. Someone just sent me a text. One of the old traders just sent me a text mentioning my grandfather, the boxer. And so let's take a look at. From there, we go over to the Swiss. Let's see what the Swiss is doing. Swiss probably, I don't know. Swiss kind of. I was surprised the cable wasn't really flirting with the daily buy. That really surprised me. Swiss is still in a buy. You can see it's got a down candle, but it's got a green dot. So it's still having its issues. Right there. And we've had like 5 days of green dots. You can see JForex has got 3 good, strong, clean hinkies. So, see, I have a question in technical analysis. How can I find out the market is a range by using indicators? That's a very good question. The only way I define it is through experience. In other words, and let me just show you. Let's look at the range that occurred in the no, this doesn't go back far enough for you, but it goes back about a year and a half. And you can see here, this is the Swiss, and it went even further back, the lines, and I just don't have the dates put in there. I just didn't. Let me see if I can do this. Make it go back further. I just have them set up at 300 days back. See if that'll do it. Oh, this bar's back too. Okay. We look at see it there? Can you see it all there? I think you can. There it comes. Yeah. So you can see it there. When it goes up to a particular area and falls back down, and then we commingle, notice our weekly matches up to it. Right there. Using our weekly math and our daily math, and then putting a Fibonacci sequence into what our math is telling us where highs and lows are. And so that's how I do it. Now, you could probably do that to a great extent with a fast and slow stochastic doing the same thing. That might, that's it will be efficient. It'll just be behind my work, that's all. I think that's the best way to describe it. Now, here's a great example of this inflation explosion. Right here in March, for the first time in a long time, like 2 years, it busted through the top of the range in the Swiss, going into from February to March, like everything else. And then it became the support, the top of the range. And then the Swiss exploded. And then what we did is we started matching our daily and our weekly peaks and directions with there's the weekly indicator right there. And you can see it goes up to a top again. In this case here, it tries to go into a buy. It hits it at the very top of it and then fails. Notice that's what the green line represents. It slipped into the buy and it slipped right back into a sell. And you can see the breakdown again, and you can see the daily did the same thing, our daily indicator. So that's how I identify ranges, by comparing them to my algorithm and the way they respect, and I'll use that word again, the way they respect the highs and the lows. They stay with inside those. Please enlarge on the screen. Let's see if we can do that. Like that. There we go. How's that? And then we put another Fibonacci up to it and watch it bouncing along that. And then you can see it supports the Fibonacci sequence. Our math is ahead of the Fibonacci sequence, so we can use our math to confirm that that's a product is moving correctly. Or I don't know if you could call it correctly. if it's working uniformly. I think uniformly is more the description, not correctly, but uniformly. Is that, oh, good. Okay, it makes sense. Excellent. All right. From there, where do we go from there? No. Let me put that back bigger again. There we go. From there, we go over to the if you have any interest in seeing any particular product that you follow, just let us know. We'll put it up there right now. We just, I have a sequence of things we look at each day. I'm always hoping that someone will interfere or suggest or ask to look at something else. I mean, I have no problem at all. I'm just looking at the major indices. I look at the euro, cable, yen, Swiss, Canadian. I look at the 5 major indices or pairs trades, and then from there we deviate off to we look at the South African rand. We look at the Mexican peso. We look at what else we look at? Oh, we find the Turkish lira almost like a laboratory experiment. Watching it because it does, former Prime Minister / President Aragon has been running the same kind of policies throughout his tenure, and we've seen the currency go from 1 to 18. So, I mean, that's like watching a live, event. I mean, that's really pretty cool. It's interesting. It's not cool for people, of course. You're looking at 180% inflation, but I mean, for us math wonks who like to play with things with mathematics, it's fascinating as all get out. All right, you'd like to see the Canadian 1 hour and 4 hour. Let's check that out. Let's see. There's the euro dollar 1 hour. So let's go to that first. We'll put that in there. Dollar Canadian. That's cool. There we go. There's the 1 hour. And I guess we could add a few more times to it. Let's do that. Let's add more time to it for you, so we can go back and analyze it. That's 9 days back now. Let's see what that looks like. There you go. So you can see here, we can work backwards, forward, or forward, backwards. Either way doesn't bother me. So you can see here, let's get another day in there so we can see what that did. As you can see, it's already in the cell there from here. So let's make it 11 days back. There we go. And you can see here, we went into a cell in a 1 hour basis here and stayed in that cell all the way down to there. And then you can see we get into a buy here and we kind of slide up for a while. And you can see we go back into a sell, it slides down. I did try to go into a buy for a couple hours there, or at least 1 hour, and then the second hour it failed and pushed us back into a sell, and you can see it goes down. Our math is going to be ahead. 8.5 out of 10 times it's ahead. So it's going to tell you before it happens. Like you can see the buy here was right, the buy here was right, so forth. The sell there was okay and right, so forth and so on. You can see it. We'll move it along so you can see it slowly, and then you can watch the repeat. You see here, it goes into the sell, tries to climb into the buy, it's plateaued, and then it goes into a nice little buy there that's kind of small but okay. And the sell, it's a wonderful sell. And then there's your, let's see, is that a buy right there? That puts you in a buy right there. That one puts you in the buy, actually, right there. Or is it that one? This one puts you in the buy. It's above the zero line. You can see, oh no, it's minus. See that plot one? Watch plot one when I put this box up. It's minus. See, it's minus 0.000076. And you can see here, Then it goes into a buy right there on the second one, and then you can see it's up, and it goes into a sell there, goes down a couple hours, and then it goes back into a buy right here. Let's see what that was. That almost got into it, but nope. And that goes into the buy. And whatever you might have lost there, you definitely made here big time. And then it goes into a sell again, and then back into a buy. And now we're in that sell as we speak. Now let's try it on a 4-hour basis. There we go. And I added a couple more days to it again. So you can see here, it on the 12th. What's today? Today's the 18th. Okay. So it went into a buy on the 12th, and has been in there ever since, up until, let's see, went into the minus right there. No, right there. It went into the sell right there. Went down a little bit. Went back into a buy right there off of that one. It's been climbing up. And now this has gone back into the sell again. It's the 4 hours back into the sell. Now let's throw a few more days into that so you can get a better flavor of it. Let's go with 15 days. Or let's try 16 days. Let's see what happens. There's 16 days. Let's try again to get you back to like the other one. Let's try 19 days. Maybe I should have done 18. All right. Okay, so it was in a buy for this move there. It was in a sell for that move there. It was in a buy for this move there. It was in a sell for this move there. You know, like I said, we're about 8.5, almost 9 out of 10 times we're going to be almost perfectly right. That's where we went into the buy. Didn't go into a sell until right there. Went back into a buy right there. And now we are in a 4-hour sell right there. How's that? Welcome to Chicago Quant Technologies technology. And you can see over there on the J4X, let's go to that. We have some tools we've set up where you can use their public indicator. This is a fast-moving stochastic on the green line and a slow-moving stochastic on the yellow dashed. When it gets above it, it's usually bullish, and when it gets below it, it's bearish. It's about it's almost 68 to 70% accurate to our math, and what makes it delay, but it's a little bit more delayed. So as much as it has accuracy, it takes a little bit while longer, like a couple hours longer, or on a daily basis, it can take an extra day or two sometimes. But it's better than MACD and moving averages and all this other stuff. And when combined together with the Hinky-Ashki bars right there, it matches up to our green and red dots right there, which confirm signals, that type of thing. So, welcome to the hood. I'm glad you asked a question. If you have any more, be my guest. Let's see. From there, we are going to slide back over to the Turkish lira. See what's going on there. First, we'll look at the dollar Turkish lira right there. And let's see. Where is it at here? There it is. There's dollar Turkish lira. You can see it's been in a buy for 5 days here now, 6 days in greens. And the line had been above, and it's been flirting back and forth. And it's kind of trying to play with the top end of its range, because this does go to 0 to 100. And that's what's kind of interesting when you're looking at moving averages and like MACDs and stochastics. It gives you a built-in range, whereas our math just tells you when it's plus or minus, if it's going plus or minus. Now we go over to the Euro Turkish lira, which is, we find that the dollar Turkish lira functions more like an index. Let me just click that. And as you can see today, The product is at the all-time highs of 18.17 now. And so as much as the dollar is weakening against other products, it is not on the Turkish lira. The poor Turkish lira is losing even more value against the dollar. Now, what's been interesting is the euro Turkish lira, which trades much more like a currency pair. It trades like a currency pair should. Has been, went into a sell for a couple of days, whereas over on dollar Turkish lira was just still in a buy. And you can see how it moved down, and now it's moving back up. You see the volatility signal of a red and a green, meaning that there's going to be some action coming. And sure enough, here we are. We get a nice little move today from it. And wow. There we go. So, there's a very interesting pairs trade. We find the euro Turkish lira pairs trade a very good pairs trade. And normally we look at everything here through, how do I describe it? Through daily and weekly signals, trying to give a broad understanding and trend to all the markets. And we're always glad to look at intraday, and you're always welcome to go, ask for intraday, and we'll show it to you. And we can actually show you live proof of intraday, how accurate. And we have a little theme around here where we try to reinforce the idea that intraday data should match daily and weekly data. And if it doesn't, then the tool that you're using is not efficient enough. You must work on your tool. Work on the tool to match that. So, okay, what else we got going on today? From there, we drift over to the Canadian. Let's see what the Canadian's up to. There's the CAD. It's playing. Now, let me show you about that top and bottom end of the range when it comes to CAD. We need to add more time to this thing. I usually don't pay attention to it too much after like 9 months. But let's see. Oop. There we are. That one. There we go. Now you can see here, this is back in 2020, and this is when the range really started to become established. Before they were riding the top or I guess you could say they were riding a bottom of a range we watched for a long while. And then the range shifted and it started playing inside here, and then we match it up until it breaks out of that range for the worse or the better. And you can see here, the last year and a half, 2 years in the Canadian has been, between this particular range here. I think Trudeau, what happened with that range, was kind of lined up with Trudeau getting a minority government. It was kind of interesting. So the Canadian was losing value against the dollar, and then when Trudeau lost most of his power, it fell back into a new range. It was interesting. I mean, we always watch how the politics seems to or I guess you could say integrate into the prices. Because they control economic policies, and you control economic policies, you're going to, change things. All right, and you can see here when the inflation kicked up in February, it didn't seem to have any real effect at all. It still stayed in the, matter of fact, the range. Let's see if we can tighten that up. It played there. There was where's February? Here's February, when everybody else lost the range. This product and the Mexican peso did not. It stayed pretty much in the range. It drifted out of it for about 4 or 5 days and then came back into it again, and then drifted out of it again for about 6, 7 days, and then tried to straddle the top end of the range, and you can see that explosion over that 3 week period, and then you can see it's been fighting not to do it. So it's kind of interesting to see how you see the Mexican peso and the Canadian not have been affected between the it's two things we've talked about: the inflation and the invasion of Ukraine. Neither of those seem to have been affected by it, whereas all the other currencies reflected it very clearly in price and action. Okay. Now, from there, from the Canadian, what we do is we look at gold. Is it gold? No, we look at oil. We take a peek at oil. Because if the Canadian, let's take a look at that again. If the Canadian see how the Canadian has been kind of trying to fight to go up in value, that would mean normally that oil is trying to go down. And it has. We've been seeing there's spot oil. It's been going down. And yesterday it tried to lift up right there. There's today. It's lifting up even. They keep on rising to new highs, or not higher highs, but rising highs, and then they fail and they close in the middle of the range or lower. Now today you can see that the low is way higher up, and the product is trading at the highs again, and we'll see what that does. And our mathematics is telling us that there's buyers coming in. That's why I have a green line over here, because there's a red dot and a green, which means a little volatile action getting ready to come into the oil market. And then from there, what we do is we drift over to the South African Rand right there. But first, let's put the Canadian up on J4X. Right there. You see that strength, just like we had that strength. You see the green line above the zero, the dashed line, or the three-dimensional zero line, that type of thing. Now let's put the South African Rand up there. There we are. Very strong. It has, you can see the strength there in the South African Rand. It's rising, which tells us gold is going down in value. That's the other part of it. So let's take a look at gold. And you see gold has been going down in value. You're going to see that the oil market and Canadian have a very consistent nature to follow each other. Not as much as the South African Rand and gold, but both of them, the South African Rand and gold, South African Rand can literally lead the metals market, whereas oil is not led by Canadian. It seems to be the other way around. Canadian seems to follow oil. Okay. So there we are with those two currencies, Canadian and South African Rand. And now what we'll do is we'll take a look at the yen. Go to one of the other major currencies. There it is. The yen is moving back up again, or losing against the dollar. And you can see the strength in it there too, same way, just like we're seeing the strength right there. And we've been in a buy for, I guess, 3 days now. Same situation with J4X, nicely. And what else? But the problem here again is we're in a weekly sell. You see it down here, so we don't have a lot of respect for this action. We just know not to be short. That's the best way to describe it. Don't be short it. Or, in other words, expect it to rise. You can, I guess, in some ways, depending on how you trade it, if you buy yen, sell dollars, or buy yen and buy dollars and sell yen, it depends on how you're playing it in a sense. But you can see here the dollar-yen pair trade is rising, and the pressure's on it. And I don't think it's going to last. I think it'll try to roll over again because we're in that weekly sell. So I think it's just a short-term situation at the moment. We can look at bonds and so forth to see what kind of action we're getting out of the bonds if interest rates are rising or falling. But I think the bond prices have dropped the last 2 days. So at this point, it's all Federal Reserve dance. Everything is Federal Reserve dance. The Federal Reserve does what it wants, when it wants, and where it wants. And it doesn't look like it's going to stop for a long while. Yeah, here's another one. Here, CNN is also doing the same thing. I'm seeing it on a headline. CNN is challenging it now, too. It's so weird to watch the mainstream actually challenge the Democrats after the event. They don't do that normally. Okay, so let's see from there. Let's see, where do we go from there? Let's go. We finished this all off with the Mexican peso. So let's look at the dollar peso pairs trade. You see, it's trying to lift up, coming off the lows. And that is the low of the range we've been following, too. It bounced off of that. And you can see that right here. There it is. See the black line. It's bounced off that range. And it slipped underneath it a little bit back in late May, June. But the last couple of years, it has stayed in that range for a while. It slipped out of it when Mr. Trudeau, the Prime Minister of Canada, the President of the United States, and the President of Mexico got together for a conference, and it ran way up like that, but then it fell right back to into its range again. So there's the Mexican peso. It's in a buy now for a second day, but the weekly is in a sell, as you can see down below it, which makes us realize that it's not a long you want to get involved in. We'll see when the weekly can build a base and get going, and then you can trust trying to get long in the buys, and vice versa. If it goes into a sell, you have to assume that it's going to maybe trade and hit the bottom, or maybe break through it a little bit like it did last time right here, and we'll see. All right, let's see, where do we go from here? Let's go to the metals complex now. We go to the metals complex, and then from there we go to the energy complex. So there is gold. And let's take a look at silver. See what silver is doing this morning. Silver is down at the low end of its range on the J4X. You can see that there. And you see it's trying to turn up. It's still a minus, but it is plus for the day. And it's in a weekly buy for 3 weeks now. So you see that strength that's been pushing into the... So we've seen silver trying to gain value. We've seen it go from the 18 to the what is it? Or 18 to 21 almost. So we've seen that action. Excuse me. We've seen that action. So we're kind of like, we're always disappointed that the metals, here we are in a recession and 10% inflation, and somehow or another, over a 3-month period, we're basically in a 10-month inflation, if not higher. Over a 12-month period, we're in an 8.5% inflation. Either way, it is amazing to me that silver is not trading at a 1.5-year high, 2-year high, all-time high. Same thing with gold. Oh, kind of surprised that they don't do that, but they don't. They're not. Gold is like $350 underneath its all-time high. Silver is $30 below its all-time high, which is a monster number when you think about it. How far down it is from its all-time high, and the products cannot get going, and here we are. they're supposed to be inflationary products. And, what's worse is that the cryptos are doing the same thing. We were hoping the cryptos, I can't tell you how many times I've said that in the webinar here, how many times we were hoping that the cryptos could be the alternative to gold and silver and the stock market when it came to inflation and risk. But instead, the cryptos function like a stock. So when the markets are going, I heard a hedge fund manager today say, when markets are moving up, we buy cryptos, and when the markets are moving down, we sell cryptos. This is they advance further on the upside, and they drop further on the downside. With the markets, not against the markets. So it kind of takes all the fantasy that we had about the cryptos, and maybe as years go on, people will start to find a way to, maybe money will drift into the way we thought they should work. We find them to be very good tools. We find them interesting. Not every one of them, just the majors. Bitcoin, Ethereum, Coinbase, that type of thing. We find them to be well worth paying attention to. And then the rest of them, we, just kind of see them as like junk stocks, Sounds like Mr. Biden is having a drone war with Afghanistan and Al-Shabaab and everybody else. All right, I guess you got to... I'm not going to take it there. All right, so from there, let's take a look at copper. There it is. See, it's lifting up. We're through the daily at the moment. We've got a red and a green. Here we're still red and getting ready to bounce. And here we're through and trying to shed the rest of the red dot there. And we're in a weekly buy, so that feels very comfortable for it to bounce up. Now let's check out, where do we go from here? From there we're done, and we go over to the energies. Let's check out the energies and see what they're up to. Here is the crude right there. You see it's trying to do the same thing as copper. It's got a red and it's got a green, but it's in a weekly sell now for, what's that? That's 5 weeks right there. And so this is the 11th week in a weekly sell. Well, I don't think there's any real strong upside coming at the moment until we get into that weekly buy. I would imagine, we might see the 100 or 105, something like that, over the next couple of weeks if we keep on trading like this. Again, we need to be in a weekly buy and a daily buy to feel very comfortable with an upwardly trend. I just heard that. Where is that? Oh, there it is. Okay, from there, let's put Brent up on the J4X and see what's going on with Brent. It was at 92 yesterday. There it is right there. Brent's at 95 today, so they're lifting that up pretty well. Where are we at this? We were at 86 in the spot yesterday. What we found more than interesting else is the contango was shifting. Today's high is actually 90.08, and we're trading at 89.66, 89.58. This thing's getting ready to expire. I think it's tomorrow, and so we can take a look at, say, the next front month starting on Monday, which is the October contract. Right? Where's it at? We had the October contract in here somewhere, didn't we? We did have there it is. No, that's September. There's a back month of November. Let's see what the November contract is doing. There's right there. You can see that, trying to lift, and it's cleanly moving up. Yesterday was its volatility signal of red and green. Today it's lifting, It's trading at 88.71. It's trading about $1, less than $1 from the next month, which is pretty tight. And then when we go back and look at December, right there, you can see the same situation. It's pushing into the daily buy, and December is pushing into the weekly buy. Was November doing that? Let's go back to November and see. It's around here somewhere. I just saw it. I see. There's November. No, it wasn't popping up yet. Okay, that's interesting. December oil is already threatening to go into a buy. We're going to switch to the December contract for the followers of the back months on Monday. I think that's well worth paying attention to. And so the contango has basically shifted there. Now you can see over here on Brent, same thing. We got a green going on, and it's trying to pierce up. So we're seeing some buying going on in the spot Brent. Let's take a look at nat gas. There is natural gas in the United States, trading at $9.20, down about 30 cents. It was up around $9.50 yesterday. See, the high yesterday was actually $9.67. Today it's at $9.26, so it's backing off. And we saw European gas trading at what was it? It was trading at 28.90. Let's see where it's at today. Is that it right there? There it is right there. 29. It's leaped even more. So as we're backing off, European gas is lifting. So it's at 29.12 now. So shows you the big differential between the two of us. There's 29.16 offered. 29.18 offered. 14's bid for. Wow. We're seeing, more buying, obviously. What's that? 9 times 3 is 27. So our ratio is shrinking a little bit there, too. We were almost at 4 at one point. Now we're at 3.2. And that is the pressure that's on the marketplace there. Now let's jump over to... let's see. Let's go to... Let's open something too at the same time right there. We're going to go take a look at the stock indices, and then we're going to call it a day. So, let's see. Let's go right to there. There it is. There is the S&P 500. You see it was minus by very little. Right there you can see. We're in that weekly buy for a good 6 solid weeks now. We'll see how that plays out. And right now this S&P is up for the day. But we have a red dot and we're just underneath it right here in the Chicago Quant. Over on J4X, right there, red and breaking down. Same situation. So you can see that same action on the fast and slow stochastic and the Hinky ASCII. Tech 100, right there. And that is just barely plus or just flat. And you can see it is also below our work right there. And we are a good solid 6 weeks in a buy. And there's the Tech 100 on Dukascopy. And you can see green line breaking down. And 2 days in red, just like we have 2 days of red dots. Then, last but not least, we'll look at the Dow Jones Industrial Average. You see that is doing the same thing. Matter of fact, it looks like did it close in a sell? It closed in a daily sell yesterday, and it's flirting with it today. And you can see the weekly has been in a weekly buy for 6 solid weeks. Let's see what it looks like on J4X. We're waiting for some reds to develop, and you can see the line is underneath, and it's at the top end of its range. See that right there? The volume's even, the bid-ask volume has dropped dramatically too, to the lows. I guess that's like a sign of more strength to come, maybe. Alrighty. I guess that's it for us. Just at a closing bit there, you can see all three indices trading in intraday short terms where went into the sell here. That is the Tech 100, and it fell down. You can see the S&P 500 right here went into a sell, and it went down in value again, so good for the shorts. And you can see right here the Dow Jones Industrial Average went into a sell right there and was sloppy, but it's had made money still. And so we can leave that up until we sign out. How's that? This is Doc from North America. Tomorrow is TGIF. Thank goodness it'll be Friday. And we will see you all same time, same channel. So, happy trails to you until we meet again tomorrow. Happy trails to you, to all our trading friends. Later, traders. We'll see you tomorrow. Same time, same channel.